Yet another indicator has arrived, clearly displaying the severity of the crisis we find ourselves in. There is absolutely no doubt denying the fact that the nations of the world need more money. But who will they get it from? More solvent nations are unable to support the entire system. Central banks cannot print to infinity without causing a hyperinflation. And ultimately, the thought of reducing deficits is simply not possible. Herein lies the problem. How can it possibly be saved? You came here for the truth, so let me unveil that for you. Today we will get into the financial crisis part 2. And I specifically want to discuss the World Bank loans hitting 2008 levels. That's right. Let's first discuss this article out of the New York Post talking about the housing boom that's going on. We've seen prices rising in many areas across the US, but it's a policy that has been applied globally, and I'll discuss that right here. The Obama administration is doing its best to give the nation another mortgage meltdown. What exactly are they doing? Well, according to this, Team Obama has pushed mortgage lenders to offer some home loans to folks with shaky credit, setting up conditions for another housing market collapse. That's right. You want to be able to give money to those who simply can't pay back. This is exactly what happened during the financial crisis, leading up to the financial crisis, and they're doing it again. Credit scores of approved borrowers, for example, have been trending down, even as their debt levels have grown. So that's right. When people aren't paying back their debt, they're accumulating more and more. What the banks have done is added more on top of that, and they've lobbied the governments to allow this to happen. The lending institutions, of course, want to give out as much money as they possibly can, and it's happening right under our noses yet again. The Federal Housing Administration and government-sponsored, quote, independent lenders, Fannie Mae and Freddie Mac, have been demanding lower credit standards just as the feds did under Bill Clinton in pursuit of the same affordable housing goal. Now, of course, there is the dream of every person to own their home, but there's a reason why this is able to happen, specifically right now, because when rents are actually exceeding the price it would be to have one of these homes, and people would rather just buy it, hoping that, of course, the prices would increase. Now, what happened with Fannie Mae and Freddie Mac? The individuals or the corporations calling for lower credit standards during the housing boom, you had an extremely large amount of people who absolutely could never pay back their mortgages given no income, no job or assets, mortgages, ninja loans as they call them. And they also had the adjustable rate mortgages that are very popular today still, and you have interest only, and there are all sorts of other ones. But when all of that went bust, you had Fannie Mae and Freddie Mac, these massive lenders here, becoming part of the U.S. government. The U.S. had to take them over because they had trillions and trillions of debt on their books, and it would have caused an absolute catastrophe. So all you do is you buy them up, and then you put them not really even directly on the books because they've been left off to the side in off-balance sheet reports. And that's the way it goes. So this is a crisis, another one, the same one happening again, waiting to happen. The International Monetary Fund, the IMF, said on Sunday that a move to negative interest rates by some of the world's central banks would help deliver extra monetary stimulus and ease lending conditions. See, the IMF has some good things to say sometimes. They're able to pinpoint that there's a crisis and that there's weakening in this one area, but their solutions are always terrible. 6 of the world's central banks have introduced negative interest rates, most notably the Bank of Japan, the ECB, and around a quarter of the world economy output is now experiencing official rates that are less than zero. To some, this is not a crisis, To me, however, and I'm sure to most of you watching, this is. They have achieved this by cutting deposit rates into the negative territory, ranging from a -5 basis points in Hungary to -125 in Sweden, essentially a tax on deposits. And that's what they want to do. This is a policy that will most likely be implemented to most countries around the world. Although the experience with negative nominal interest rates is limited, we tentatively conclude already that overall they help deliver additional monetary stimulus and easier financial conditions which support demand and price stability. There's no conclusive evidence about this whatsoever. But somehow they conclude that it's going to help support the demand and price stability. I don't understand how they came to this conclusion, but obviously they're all in on it. I realize that, but taking it word for word, there is no way that this makes any sense. It actually causes price instability. What are people doing in Japan right now? They're taking their cash, they're stuffing it under the mattress. Other countries are doing the same thing. Whenever there is a situation, people take their money out. They may invest in real assets if they're sophisticated somewhat, but if not, they don't know, they don't have that trust for the banking system, so they take the money, stuff it under the mattress, they put it in their safes, they hide it here and there. Now, I don't necessarily agree with that, but that's what people are doing. Let's move on to this. We're looking at the World Bank. Huge news out of the Financial Times. A surge in demand by ailing commodity exporters in the developing world has pushed up lending from the World Bank this year to its highest levels since the aftermath of the 2008 financial crisis. How many times, and I've even said that, how many times have you heard me say this is another indicator that we are now in the financial crisis part 2. The same financial crisis, same statistics, only, let's say, 9, 8, 7, maybe 10 years later, depending on the stat, now facing the same thing. How many times? I've probably said it hundreds of times now on this channel over the past couple years alone. And here we are showing you these stats, and there's no doubt in my mind that there will be people denying it. Not just on this channel, on other YouTube channels, on the comment boards, on all sorts of other mainstream media. You'll see it in the newspapers. You'll see economists on television. You'll see politicians on TV, newspapers, media, everything else. They'll deny this. But it's really, really troublesome to me to read these statistics over and over, to put together the videos. You have 95% of the people agree, and then you have these couple people which really bark loudly, unfortunately, and they're spitting out lies. And that's what really slows down our progress. Anyway, finance ministers and central banks from around the world are due to gather in Washington this week for the spring meetings of the World Bank and the IMF. The latter is widely expected on Tuesday to downgrade its 3.4% global growth forecast for this year. I don't know where they're getting 3.4% global growth, but it's not going to happen. I could assure you of that. Now, whenever the IMF and the World Bank meet, whenever there's a Davos meeting, whenever there's a Bilderberg meeting, there's always something that comes out of it. Nothing is ever good. Actually, the G20 as well. Look at the G20 as an example. They met in Brisbane, Australia, and then the bail-ins were put into law after that. So this is just an example of where things can happen, where things could be put into place. They always meet together, and then they go to their respective countries and give the rule of law, and you'll see that will take place. But alongside the scheduled discussions on everything from slowing emerging economies to tax havens, officials at the World Bank will be dealing with an increase in requests for loans from commodity exporters such as Indonesia, Nigeria, and Peru, with the struggle to cope with the effects of the collapse in the global commodity prices. Many countries are suffering right now. Look at Venezuela. Look at countless countries suffering on the outside. You look at a country like the US, and it's suffering more on the inside. So if you look at their GDP, for example. Wow, they're doing great. Look at their stock market. Wow. But then you actually look at the people on the street, the 10 cities set up everywhere, the amount of food stamps that there are, the amount of people on different types of social programs. The numbers don't look good. But of course, you have to look into that. You can't look at the mainstream media. You can't look at 200-day moving averages to get that type of information. Let's move into what I wrote about in my book. And I'm using the IMF as an example here. There's a whole chapter actually on the IMF. That's how serious I believe they are because of what they do to countries. The short story is that our tax dollars go to bailing out countries that are nearly bankrupt. And I use this little simple diagram to get my point across. You have your paycheck, you have your taxes, and then in the pie chart in the bottom right corner, those taxes are made up of all different things. A lot of it you don't know where it goes, but a small percentage of that, and this is not a direct, this is of course a generalization, will go to the IMF, funding other things as well, other supranational entities. Some of that money ends up going there because we make up these supranational entities. They're made up of different countries. And of course, that will lead its way to the banking establishments, one way, shape, or form. The IMF is able to use our own money and funnel it into different countries which they deem is in need of that at the given time. But you don't see the US or Canada, the UK, Australia, other nations getting bailouts in this way from the IMF. All you see is money being dumped into a country that, it has these terms attached to it that make it impossible for them to pay back. But of course, they have their people on the inside making this happen. And this is what the crisis that develops over time, even though it should be restored very quickly, it seems that they can never or rarely ever pay back. The U.S. public pension system has developed a $3.4 trillion funding hole that will pile pressure on cities and states to cut spending and raise taxes to avoid a Detroit-style bankruptcies. What you're looking at, the pension funds, 3 times larger than the official figures showed. So when you actually calculate all of their numbers out, they're always making it seem like they are solvent. But we know that's not the case. All of these governments are insolvent. This one right here, the U.S. public pension system, just one of those examples. I just talked about Japan in a recent video, and here we are looking at fears that Japan's anti-deflation strategy is unraveling have intensified after a sharp rise in the value of the yen against the dollar prompted a concerted attempt by policymakers in Tokyo to talk down the value of the currency. That's right. If your currency is strong or gains a little bit of strength, you have to push it down, make it weak. We can't have that here. We need to have weakness in the currency systems. I mean, it's a joke to read this kind of information. Usually you would want a strong dollar. You want your nation to seem strong, but not anymore. That's not the way it works. And right here, I just talked about the fact that it gained 12% against the dollar since the start of 2016. So all I wanted to say about this is that we can see how the currencies are manipulated back and forth. We can see how nations are able to improve their exports by bringing the value of their currency down. This is a strategy that many do use, and it's been going on for quite some time. That's all for this video. Yet again, another video where I show you that we are heading back into the financial crisis. I like to call it the financial crisis part 2, but yet again, it's simply another chaotic event waiting to happen. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my book, The Money GPS, even more informative. If you head over to Amazon, they have a look inside feature, which will allow you to flip through the pages of the book and see if you like it. Take care.